And we're live. Hi, welcome in. In this video, I'm going to go over the rates, how they work, how they're calculated for you and your business, the terms, what part of the underwriting process looks like. I'm going to go into that. Why is that very important? So you have an understanding of what you can get approved for, whether there are interest rates or not, and it's calculated on total payback, which I'm going to focus on a little bit more on in this video for the up to 2 million incredibly fast funding you can get, and even up to 25,000 same day instant approval. And in case you don't know what those are, I'm going to leave them down below in the comment section, or if you're watching this later on YouTube, it'll be there. But before I get started, if you're here right now, give me a hashtag live and a hashtag replay so I know the time frame you were here. Now, before I get into this, I'm going to talk a little briefly about what's happening in the SBA world, the grant solutions, and then I'll get right into the terms as well as the rates when it comes to this from the underwriter's perspective. So, there's 100 billion plus for SBA EIDL right now being considered and given to many operating businesses with the right qualifications. Now that's going to end on December 31st. So if you haven't gotten an application in yet, I highly recommend you do that. The time period to get that will start passing by. And so make sure to look into that a little bit here if you haven't already. And so that's being offered, and that's a way to go. You also have the targeted SBA EIDL grants. You can get up to 10,000, and this is for low income places. And for people who were impacted with 30% or more of their revenue is what you can qualify for during the span of from 2019 to 2020. Why is it during that period? It's because we're calculating things like cost of good and sold and a few other things that we need to know for tax statements. Now that's out of the way, let's get into a little bit, because I wrote down my notes here, what I wanted to cover. And I know this won't sound like a sexy topic, but stick with me. It'll be very valuable to you, and you'll get to see why you are getting approved for less in the middle or more for an approval amount, and also for the repayment. If you're asking, well, why am I told that I have to pay this much back? It doesn't make sense to me. You're going to get that right here. So I have a few notes here I'm going to be going through, and just to look at my spot. Oh, before that though, this is what I wanted to cover. The top 3 app issues, the 3 top application issues that most people go through, and why you don't get the funding right away, not necessarily get this approved for what you're missing out on an application, is your business start/inception date. Make sure that when you go through an application, and I show you what these applications look like in case you want to learn more about them, I'll leave them down below in the description, show you how they look like and what to expect. But make sure you put the business start date. That's usually at the very top left or right side. You'll probably see it by itself, more or less, depending on what service you're going through. But make sure you put that information down. It streamlines the process instead of having people going back and forth with you, the lenders and the underwriting team, to look for that. Now, number 2, social security number, very important. Why do we need it? Because that's also attached to your FICO credit scores. Your social security number will also give us availability to that information, so we can actually know whether it is what it is. And the FICO, the personal credit score, shows us if you're making payments on time, your credit usability. And we want to know these things that factor into a business loan, because, hey, if you can make the payments, then you can make them. If you're not, we're going to be hesitant to give you what you want, or if anything at all. So make sure you have that in place. And then lastly, very simple, signature. Make sure you are at the end of it, in cursive, however you do it, you put that, saying that you authorize the company to do this for you, and that you just put all the information where it needs to be, and your situation is good to go. This way you don't have to come back to it. You don't have to be that person who's like, why didn't my application go through? Well, we just didn't have any of these 3, or all of them weren't included. Now, think about that. Some of the reasons you get declined: a default. What is a default? It doesn't necessarily have to be a merchant cash advance default, but this means in general, what type of business loan or cash advance were you not able to pay off at the end of the month? Or it can be less weekly, it can even be daily sometimes. But why weren't you able to pay it off? And if that happens, well, this is what this, especially in the cash advance field, this gets fired to every other lender, every other program. And so whoever you go to apply for, they'll have your information on screen and they'll say, no, this person had a MCA default. It doesn't matter if it was just recently or if it was years and years ago, you will never be able to get funding. I've had clients come through me who make a boatload of money. You're doing well financially from month to month and annually in gross revenue, net income, and you can't get approved for one because you have this default. You couldn't make the payment. So why should we trust you? And there are like little forgiveness ways to get in, but very little people do that. They'll actually give you a lot. They'll tell you, hey, I need this money back by the end of the month. They'll actually tell you to pay back more, or it can be in less time. So don't go through all that if you can avoid it. A background check. Do you have a criminal background? Do you have an abusive background? Is there something happening where we're just saying, no, this person is not going to be responsible for this, or we don't want to put this into somebody's hands who is going to be held accountable for this type of acts or this type of way they carry themselves. Number 3, we have the bank statements. You may have low sufficient funds. Maybe you have negative bank statements in the accounts. You're stacking those on. You can only get so many in a year. And if they're giving you a little bit of leeway, please don't have any more. But bank statements, you're saying you make 20,000, but when you bring up your bank statements, you really have like 5,000 coming in. So don't be disappointed with that. Or negative bank days, as I said already, NSFs, that's the other one. And then the last one here, we have your credit score is too low. If we're asking for a personal FICO credit score and it just doesn't meet the eligibility, then you will not get funding for it. And there's not this whole like, but I'm just 3 credits underneath. We'll probably take it into account, but we want to make sure everything is in line. Now, that leaves me into the terms and what our underwriting team will look at. And this is stuff that I carry in my mind all the time when I'm speaking to you guys, is A paper through D paper lending. So what this means is A paper is at the very top. This is where you're like financially doing well. You meet a certain requisites. You have this certain FICO credit score. And then this can show how much you can get approved for and the time in business. We're looking at generally with A paperwork, we're looking at least 2+ years in business. And that's at the very top of things, as I said just now. And we're looking at least a 680, if not 700 plus FICO credit score. That's what we want to look at for A paper type of FICO. We want to have a higher, because that shows you're making payments on time, you're building that credit, you're going up, and then your monthly income, we want to look at it as like a 50,000 plus per month, preferably, and in revenue and sales coming in. And with those 2 years in business, with that FICO, like I said, 680 plus, 700 plus, preferably, that's where we look at it and say, okay, what will be the total payback? If it's not an interest rate with David Allen Capital, for example, this is how we operate. This person can qualify here for a 1.19 to a 1.29 or a 1.39 total payback. So if you had those qualifications, you had that A paper, you have the 50,000 plus monthly in bank revenue, you have a 680 plus, 700 plus preferably, you have 2 years in business coming in, then let's see, we're going to do here 20,000 times the 1.19, and that's at the lowest. You can expect a payback of 23,800, which is inexpensive. To some, it would be a little bit more expensive if you're trying to get out of a tight pinch or you're not exactly projecting value going forward. But just think about it that way. The A paper, you can get a less of a payback amount. That's just how this works. We're risking as it is already. The lenders are putting their money in. It's not a bank, okay, where you're being asked for collateral or whatever it may be. We are taking a higher risk, and these are unsecured, so you don't have to put any kind of collateral in. So think about that when you come into and to apply for a cash advance or any type of business loan. So A paper, already covered that. B2C, we're looking at a 550 FICO and above. Like people that I speak to you on a daily basis, and I will ask that question: what is your FICO score? The reason I ask that, not only for a specific service, but I want to know if I can match you with the best program and the best lenders. So if you're at a 550 and you say you're doing 500 or 50,000 plus per month, the thing is, we want to see at least 15,000 plus per month, or excuse me, 25,000 plus per month in that kind of a category to give you the best rates. And we're looking at a 1.39 to about a 1.29 to a 1.49 for that specific requirement. And a few details in there. 675 plus FICO. I'm just trying to find where I tracked here. And then D paperwork, that is above a 500 FICO. So anything of 500 and above. We can do 450 below with Bank Breezy, but we're already taking it's a very high risk. So you have to take that into account. Now, 12 to 24 months, this is for the A paper, 50K plus monthly in revenue, 675 plus FICO. Again, just reiterating what I said already. Over a year in business, that is for that example. Could be 2 years, preferably. We can do over a year. Now, we're looking at a few other things here for that's A and B paper. Now we're going to C paper, 7 to 11 months, 25,000 plus in monthly revenue, 600 plus FICO, 6 months in business. At least is what we asked for. For D paper, we have 4 to 6 months. And those are the kind of the terms there. 15K plus per month in revenue, a 500 plus FICO, and then you have to have at least 4 plus months in business to be able to qualify for that. And we're just looking at these things like your business terms, your business type, the type of revenue and the credit that's coming in, the cost of the funds that you would get approved for, and so forth. An advanced program, 10K low income, got that there. Now, you got to hear more or less what happened in the underwriting process once I send that information off, that you can expect A to D paper terms. A paper, again, we're looking at like 1 year, preferably that 2 year plus range. You're doing 50,000 plus per month in revenue. And then you have a 680, 700 plus, preferably FICO credit score. And that would qualify you for lower payback terms. And that's how usually if there's an interest rate platform, that's how they look at things. There's a high risk already involved giving you the money from the lenders. So you have to, again, factor that. And then you have A to B paper that falls in that range again. That's 1 plus year. We can work with that. And then we have the 25 over the 50,000 plus range with at least 600 plus FICO. And then the D paperwork, you do not have any type of flexibility with D paperwork. What you get is what you get. And you can't expect there to be weekly payments. You're getting the daily, and then you might be getting a higher payback. That's just how it works. So you have to be prepared for that. So what should you do as a business owner? Increase your revenue. No matter what, increase your revenue. No matter if your FICO credit score is less, if you have different deposits coming in the last couple of months up to a year, you want to make sure your revenue is increasing. That or stable. Have deposits going into the accounts. Don't be like, okay, well, I have 10 different business checking accounts. I don't need one. Yes, you need a business checking account. This will show you your legitimacy. Now, that is everything that I wanted to conclude in this video. I went over the different rates. Specifically, this is for DAC. This is more of a payback, not an interest rate. 1.19 to 1.30 is what you can expect for an A paper with a little bit of that. I said 1.49 a little bit earlier. We're going to go 1.30 for that one. Please excuse me on that. And then we're looking at 1.319 to 1.49, up to about 1.69 for you have B, C, and D paperwork. So those are the things to expect in this. If you got any value out of this, please leave me a comment. Let me know if you've been watching this again on the live, if you're here on the replay, #replay. And for any more information, if you're watching this on YouTube by the time it's up, look in the description to learn all about your financing solutions. And hopefully you get to power your business forward so you're not wasting any more time sitting back wondering what if. And if I have not gone back to you, hey, I will get back to you. I'm very busy, like productively busy, but If I haven't, I will. All right. Thank you for your time. Bye.